Good morning, everyone, and welcome to today's webinar. My name is Alex Paul from InvestorStream, and I'll be your host today. Today we have, firstly, I would like to acknowledge the absence of Managing Director Tim Hart, who couldn't be here today due to illness. We wish him a speedy recovery. Now, in his place, we have Non-Executive Director Sam Jarvis, as well as Chairman Simon Johnson. And Sam and Simon are going to discuss the company's reserves and resources update, including for the first time the reserves and resources gained with the acquisitions of MHP and the new Illinois Basin asset. Simon and Sam will give a short presentation on this progress, and we'll be on hand to address any questions that you might have following the presentation. A lot of you have already taken the liberty to send through some questions to me, which is greatly appreciated. Please feel free to send through your questions in the question pane in the GoToWebinar control panel via the chat platform. You can also simply email them to me at alex@investorstream.com.au. You can also download a copy of the presentation by navigating to the handouts pane in the control panel. I understand it will be on the ASX shortly. And finally, a copy of the webinar will be available on AXP's website and social media platforms later today. But for now, I'd like to throw it over to Simon, who's going to kick things off for us. Simon, the floor is yours.
Thanks very much, Alex, and good morning to everyone. Thank you for your continuing interest in AXP. At the outset, I just want to apologise to everyone for the time it's taken to bring this to the market's attention. We've had some well-documented headwinds in recent months, and a constant flow of activities that has retarded the date of us sharing this with you. So we regret and apologise for that delay. Next slide, please, Alex. So here's our health warning. Please, we ask that you familiarise yourself with the limitations of what we're about to share with you today. Some of the information is forward-looking and comes with all of the usual caveats associated with forward-looking statements. Next slide, please. Okay, we wanted to spend some time making investors aware of the process that we've gone through in preparing our maiden reserve statement following the material MHP Tray and Kentucky acquisitions, Kentucky JV acquisitions. Whilst we've continued with Gustavson as our incumbent independent assessor for Colorado and our legacy Illinois Basin assets, we have also recently engaged Wright & Co., who are a highly reputable company from Tennessee with long and very specific knowledge of the Southern Appalachian Basin, where the heart of our new asset base lies. Significantly, we're also very fortunate at AXP in having the services of Mr. Russell Hamilton, who's the Vice President General Manager of the company. Russell heads up our operations team in Lexington. He's a very experienced geologist. He's worked for the regulator in state before, and he serves as our competent person pursuant to the requirements of the ASX. And he's had an active hand in coordinating and interacting with the independent entities that I just mentioned. So Russell, or RD as we call him, is one of the AXP assets you won't find in the balance sheet. RD and his small team, however, mark a really important step, I think, in the maturity of our company. The in-house technical capability, which is led by RD, and this reserve and resource report will be fundamental in unlocking unrealised value across our land holdings as the company moves forward. Next slide, please, Alex. So to the headlines of the report, our 2P now lies at approximately 6.4 million barrels of oil equivalent. This is a 50-fold increase on previously announced estimates, which really reflects our shift from exploration and appraisal, mainly in Colorado, to production and infill drilling across a much larger asset base focused on Kentucky and the surrounding states. A very high proportion of the resources on both the 1P and 2P basis are categorised as PDP and PDNP, which speaks to their quality. Perhaps equally significant is the 2C estimate, that is our contingent resources, which have seen a modest increase from 192 million barrels of oil equivalent to almost 212 million barrels of oil equivalent. Next slide, please, Alex. So let's just drill down on these numbers a little bit. We haven't bothered with a historical comparison, as the impact of the acquisitions really renders that irrelevant on an enterprise-wide basis. I want to emphasise that this is our new baseline and should be the starting point from which you judge our activities going forward. As Tim Hart's team, led by RD, do their work through time, we will be endeavouring to convert as much of the contingent resource that you see there in front of you to booked reserves. We'd like to draw your attention to the bottom line 2P aggregate figure there of 6.4 million barrels of oil equivalent that we mentioned earlier. As you look across the breakdown by hydrocarbon category, oil, gas and natural gas liquids, you'll see that we have many years of potentially producible reserves in each category to feed our off-takers. The challenge for management will be to do the technical work, develop the programs and projects to transform the contingent resource, consider the 2C measure listed there in front of you, to the reserve side. This also requires a consideration of economic thresholds, of course, but nonetheless, the numbers underlie, I believe, the potential of the company and the importance of having a technical capability, ideally in-house as we do, and a pipeline of projects that you can keep full of, subject to the industry forces that everyone deals with in our sector. So the mid case or 2C estimate of oil is significant in the current environment, but the gas number, which is some 714 billion cubic feet, is significant to maintain or expand our sales into the East Tennessee pipeline and also to develop our new crypto mining sales channel. Next slide, please, Alex. We've talked to you in recent months about the work we've been doing on the KJ pipeline. This tie-in, which we'd identified as low-hanging fruit, is running 1 week late in terms of a completion date, but all wells will be online in coming days. Ongoing workover program is progressing well. It's an important part of production maintenance for the company. As we've said many times, we brought this activity in-house to give a schedule control, cost discretion, and to build and preserve knowledge of our asset base internally. We've had a bit of a frustrating wait for the permits in Colorado, but Tim Hart's assured us that we'll be seeing gas coming through the meter to Elite imminently once these permits are in place. Next slide, please, Alex. We recently announced that we've identified some drilling targets in our Western Kentucky acreage. The potential for these prospects was identified during the Trey acquisition due diligence. We have some work to do, but we are aiming to spud before year end. It's nominally a 4 well plus 4 option work scope, and we're engaged in the early stages of procurement and planning right now. These are low cost vertical wells that are going to be targeting formations that currently produce for us or our competitors in the area. Longer term, we have a developing inventory of drilling opportunities across our acreage in Eastern Kentucky as well. And we'll keep you appraised as we compare and rank these targets going forward. Next slide, please, Alex. In conclusion, because we want to reserve as much time for questions as possible, I just want to remind you of this organogram yet again, because it's so fundamental to everything that we do at AXP. I was lucky enough to visit the team in Kentucky in recent weeks. So I'm presently in quarantine, now back in Australia. But I can attest that the discipline that underpins this organogram is in everyday use in our headquarters and out in the field. Tim, RD and their colleagues are building a great story, and the board is very supportive of what they're doing. And I'll now pass the call back to you, Alex, for questions.
Thanks very much, Simon. We had a number of questions come through. Sam, I'd like to address this first question to you if I can. Yesterday, AXP had a notice for an application for the quotation of new securities. This question comes from a US investor not too familiar with the ASX. Does this mean that AXP is issuing more shares?
Thanks, Alex. Well, in a word, no. I'm glad somebody's asked this question because we get it quite a lot and there's a bit of concern around it. To be very clear here, this is not AXP issuing new shares or new options. But as part of our disclosure requirements, every time an option holder wants to convert options to shares, and this is existing options that were issued as part of capital raises, up to 12 months ago, we have to lodge a notice with the ASX notifying all shareholders that these options are being converted to shares or being issued as shares. And that's all these notices are.
Thanks, Sam. So given the drop in the oil price in the last week, what oil storage capacity do we have to stockpile and capitalise on a higher oil price? Can we easily add to the storage capacity?
We do have a lot of flexibility here, and it's not difficult or expensive to add storage tanks. In terms of total capacity, I'd have to ask our operations guys. But I mean, in the past months, we've had upwards of 25,000 barrels of oil in storage. And I think total capacity is close to 50,000 barrels. And we haven't nearly used that capacity in the past 6 months. So we have plenty of capacity. At the moment, we've got around 19,000 barrels. So we can hold a bit until prices recover.
Thanks, Sam. Now, Simon mentioned the drilling program that you're going to undertake. Are you still on track to drill new wells this side of Christmas?
Yes, we're very much hoping to spud in December. Permitting is, I mean, you've got to remember, permitting in Kentucky is a much more straightforward process than it is, say, in Colorado. And these are not complex horizontal wells. These are low-cost verticals. So we will we'll permit them all at the same time. And we do have our submissions well advanced.
Thanks, Sam. Now you have resumed operatorship of the tray leases. Do we expect to see some improvements here?
Yes, absolutely. The ops team in Lexington is well across the leases now, both with respect to enhancing the performance of the existing wells and identifying new drilling opportunities in existing producing leases and other formations that we haven't looked at yet. When we closed, we inherited a huge amount of data in paper form, unfortunately, but that our geos are pouring over now, which is really encouraging. And just a side note, the R&R report doesn't include a lot of that additional data. So, I mean, we're quite encouraged by what we've seen so far. But once we mature a drilling program and announce the drilling locations, we can talk in a bit more detail about these leases and perhaps their potential upside.
Thanks, Sam. Simon, I'd like to turn to you for the next question, if I can. It seems that no matter how great the news is, there's just no reaction from the markets, simply because I guess maybe not many know about AXP and the AXP story. What should investors hope for to attract some bigger financial institution or additional exposure?
Yeah, look, we agree that the stock's not correctly valued, based on our understanding of its potential. We always believed it would take some time for the market to understand how our shift from exploration to exploitation places us in a different category of oil company. We think we're very active in terms of media exposure. We're out there telling the story on a regular basis. We regularly collect and examine analytics from our media advisors, and so we believe our penetration is actually very good for our market cap and industrial sector. Possibly, a larger problem for us is the day traders that are attracted to the leverage our low share price offers, and that tends to keep us range bound. The energy market has seen considerable volatility as a sector as well, and we're affected by that as our peer group is.
Thanks, Simon. So why wasn't the NPV and dollar per acreage included in the R&R as done in the November 2019 report for the P1, P2 reserves?
Yeah, look, great question, Alex. Look, firstly, we're not obliged to provide a valuation. It's an option. The WTI oil price, has fallen considerably since last Thursday. So any valuation we might have provided last week will immediately be at odds with today's price. We've seen $10 come off the oil price. So, AXP is now a company that's focused more on production than exploration potential, and as such, a valuation estimate is arguably less important as an indication of potential. It is beneficial to have declared valuation when raising finance, engaging in corporate activity, and with some of the anticipated accounting changes that have been mooted, it will more likely than not be a negative for shareholders, however, because it provides a valuation anchor. We think it's best to remain focused on our peer group than our past, and most of them don't provide a valuation. Shareholders are free to make their own assessment based on the numbers we've issued. As I said earlier, this is our maiden assessment following, a number of material acquisitions that's transformed the reserve base of AXP. It's an appropriately conservative assessment of our assets, and that we hope to improve upon those estimates through time, following the application of proper technical focus, financial discipline, and so on. We're really trying to run this like a proper energy company, not a pump and dump show.
I'll just add to that, if I can, Alex, and reinforce what Simon says, that, the company is very keenly focused on delivering on what we have and demonstrating that in revenue and bottom line, rather than putting a figure out there which is done by a reserves auditor and is a snapshot valuation, which should really be less meaningful to shareholders compared with actually producing from the reserves that we have in place and generating cash. That's our focus.
Absolutely.
Thanks, Sam. And I'll address the next question to you if I can. How far advanced is the supply of gas for elite mining, and where does the resource fee for that use come from, i.e. reserves or contingent resources?
Sorry, I was just on mute. The equipment is in place in Colorado, and permitting is ongoing. It's not as straightforward as, say, Kentucky, but it's moving forward, and we, as Simon said, we hope to be generating gas from there very, very soon. I can't say exactly when, but I would just say it's imminent. The resource that it's producing from is it would be the Denver-Julesburg 2P reserves, DJ Basin 2P reserves.
Thanks, Sam. So back in 2019, the Pathfinder Reserves Report showed 182 million barrels of oil equivalent at the lowest 1C. The current 2021 report, with the MHP and Trey acreage included, shows 149.02 million barrels of oil equivalent at 1C. Can you explain this in the simplest terms, how this works and how this is a substantial increase?
I believe the 182 figure in the report that's being referenced is a gross figure, and the 138 MMBOE in the 2021 Pathfinder report is net, and going forward and exclusively we'll report net reserves and net resources as well. Previously we've reported gross. As we report financials, we report net, which is net of royalties of the other mineral interest owners.
Thanks, Sam. So how many of the original 15,777 acres of Pathfinder is still owned by AXP?
We hold about 2,000 acres by production in the DJ Basin, and all of the remaining acreage is held under the Prize Energy lease agreement, which is, I guess, fathered by the Cimarex lease. This lease agreement is currently under discussion in respect of a new development plan, but that will take some time. Our current acreage in the DJ Basin is about 12,500. As we mentioned last year, we dropped the Chandlers Creek lease because of the size of it, and we couldn't get a good concentration of drilling locations, and our focus at that time was not drilling, it was conserving cash.
Thanks, Sam. Now I'll take this one to you, Simon. Will AXP in any way take advantage of the shortage of oil and LNG in the USA?
Well, we prefer to express it in slightly different terms, Alex. We believe that short-term oscillations aside, and we're seeing some at the moment, there's a very prospective medium-term outlook for hydrocarbon prices in the lower 48 states. And we intend to continue to position the company to maximise the benefit of that opportunity to the shareholders. We've shown our ability to prudently time oil sales when prices are up. Sam mentioned or alluded previously to what we're doing to manage our tank inventory on the oil side. We don't have the same latitude with gas, which is difficult to store, of course. So we put that into a pipeline, or going forward, potentially sell it to crypto miners. So, indirectly we will benefit though, because US LNG exports are forecast to reach, I think it's 11 BCF per day, December to February. That's the highest on record. And with more LNG plants and trains coming online the next few years, the export trend's only going to strengthen. This in turn will shift a lot of US gas into the higher priced export market, and that gas is going to need to be replaced. So, we think we're very well placed. This reserves report underlines what we have, standing behind us. And yeah, we think we're in an excellent position to capitalise on our asset base.
Thanks, Simon. Do you have any update on current or new government contracts?
Look, there's not much really to share with people right now. We have several active long-term gas sales agreements with various government agencies. They've been in place for many years. We anticipate those contracts will remain in effect for the foreseeable future. We really don't have anything material or timely to share with the audience just now.
Thanks, Simon. Now, Sam, we've had this question come through a number of times from investors. Can you just give us an update on what the time frame is and the current status of uplisting to the Otcb?
I can only really say that it's in progress, and we'd have to refer shareholders to what we've already disclosed to the market. Our press releases are available on the website, and we direct shareholders to the information there. But I mean, all I can do is confirm that we're on track and it's in progress.
Thanks, Sam. So are there any discussions with Bitcoin mining companies other than Elite?
Again, we'd have to refer shareholders to what we've already disclosed to the market in terms of gas sales agreements and other offtake opportunities for stranded gas. I'd say please look at these press releases on the website and what we've said publicly on the subject. We have previously indicated that we're in discussions with more than one entity in addition to Elite in this area, but we don't have anything to add at this time. Okay,
thanks, Sam. Now, Simon, there's an article floating around that was published in the last couple of days, and it's regarding the Biden administration proposing a slew of changes proposing a slew of changes to the nation's federal oil and gas leasing program, which includes hiking fees on drilling companies and limiting their access to sensitive wildlife and cultural zones. Does this impact AXP, and does AXP hold any leases on federal acreage?
Look, no, Alex, none of AXP's production is on federal land, so we're not immediately affected by these moves. However, I would say that, regulatory creep's a prominent risk factor for all oil and gas companies today, even in the USA, where the industry is better regarded than in other jurisdictions. It is disappointing that moves like this typically take place without any meaningful industry consultation. We need to be sensitive to stakeholder concerns. We understand that. And we've previously mentioned that we've engaged an environmental resource so that we can not only meet our existing obligations, but also look at what else we can do from an ESG perspective to meet community expectations in that regard, to anticipate future requirements and maybe even recycle infrastructure in new ways that's accretive to shareholder value. But, with the gas sales agreements to crypto miners, we've demonstrated that, we're forward thinking. We're the first ASX listed entity to identify the Bitcoin mining opportunity and execute on it. And we believe that we've got lots of opportunity for further innovations. Hopefully some of those will have a solid ESG credential behind them.
Thanks, Simon. from your perspective, is there any possibilities to reduce the OS? I believe that could be one of the main reasons investors are hesitant to invest in AXP, and I guess bulky OS invites day traders and MMs as there are plenty of shares to play with, and you've alluded to that already. And I think this is becoming a bit of concern for investors that are in there for the long haul. Could you just provide us with a bit of an update on your plans to reduce the OS?
Yeah, look, first of all, we recognise that there's some truth in that perception. We've said several times what the company did in the past is not what it will be doing going forward. We have been asked about share consolidations previously and clearly indicated then that we don't believe that now is the time for considering mechanisms like that. We're presently more focused on seeing what we can do to use our clean balance sheet to raise capital going forward. There are challenges in the debt finance market right now for oil and gas companies, but we don't like coming back to the shareholder base for capital unless we see a compelling opportunity for growth or consolidation. As such, working capital is very precious, and it's really a strategic resource for us. So right now, we believe that there's an infield drilling opportunity that targets, new horizons in the West Kentucky acreage that merits allocation of some of that money. Long way in a short time, and look, we just ask that you recognise that and be patient before you the investor base sort of directs us to buybacks and consolidations and the like. Yeah.
Thanks, Simon. Now, on that topic of buybacks, shareholders know the recent options that were exercised diluted the share structure, even though it wasn't, for want of a better term, a quote, toxic dilution for capital raising. It still had a large effect on the market sentiment for the stock. Now that the company is growing stronger every day financially, would the company consider a small buyback to the amount of the option shares recently exercised and the near future shares that will be exercised in April? Is that a possibility that you're considering?
Oh, look, as a general principle, management and the board is in favour of anything that can return value to shareholders, be that dividends, buybacks, or other mechanisms. But this needs to be sustainable through time. The challenge is that under the current management board leadership, we've just executed several large transactions, very well-timed transactions, I might add. And this has taken the company from a precarious financial position only 12 months ago and re-delivered it to a position of relative health. So, nevertheless, we need the cash that we have on hand right now to bed down these transactions and continue to grow the company, to get that valuation, pop that we're looking for. We had an emphasis matter regarding our ability to trade as a going concern in the past, and then we've only recently overcome that and put it behind us. So, this opportunity will come, but we're simply not there yet.
Thanks, Simon. Now, Sam, I noticed that as of this morning, the share price is trading at 1 cent. But if it dips below the 1 cent share price, how does that sub 1 cent share price affect the uplisting on the OTC?
Thanks, Alex. Yeah, we do need to trade consistently in excess of 1 cent for at least a month as a prerequisite for uplisting. But I mean, we've been trading strongly relative to the sector since we recommenced trading after the most recent suspension. So we're fairly confident in that respect.
Thanks, Sam. Just a couple more, gents, before we let you go. Now, there's some concerns about the lack of management investors. It's perceived to be a bit troubling to some investors, as large investments from people in management would show confidence in the company. Do you expect the CEO to be joining the top 20 investors in the near future?
The CEO is in fact a top 20 shareholder already, and the board and management firmly believe in, alignment of purpose with shareholders and making that alignment material. So we are well aware of that, and we are, vested. Shareholders need to be aware, though, that the board and management have blackout periods, preventing share purchases during several periods. And, you know, for example, pending finalisation of our accounts, and we're not able to trade on ourselves, the directors, and KMPs are not able to trade on an unrestricted basis for obvious reasons.
Thanks, Sam. And Simon, final question to you, if I can. What is the timeline for getting Bitcoin mining up and running? And if this is a focus, approximately what kind of revenue do you expect?
Yeah, look, it's been a focus for many months now. As mentioned previously, and I think Sam answered an analog question a little earlier, you know, we're an ASX innovator in this area, and it's been heavy going explaining what we're doing to the regulator. Getting our maiden site up and running in Colorado has been stymied by permits in that state, unfortunately. When you do something for the first time yourself, it can be challenging. When you're doing something for the first time for everybody, you can encounter some headwinds that are difficult, perhaps impossible to predict. We've overcome most of the delays now, and as Sam said earlier, we hope to have some news to share with you very soon on that front.
I would just add on to that and say that in Kentucky, the state oil and gas regulator has removed the ad valorem tax on any gas. Ad valorem is a sales tax, a county and state based sales tax. The regulator has removed that tax for any gas that goes into crypto mining, which is positive from the perspective of Kentucky.
Thanks, gents. We just have one last question come through, which I'd like, I might get Sam to answer this one for me if I can. Is the JK pipeline completed and commissioned?
That would be the KJ pipeline.
Sorry, KJ pipeline, yes.
We had to pull the guys off, the team that were doing that. We actually said that we did actually undertake to the market that we would complete that by end of November. There's, I think, 1 or 2 more wells to tie in because we had to pull the guys off to do something else. So I think it'll be complete in the next few days, and it's going well. Excuse me, and it's producing above what we said it would produce. I think if you refer to one of the slides, it's we've added, I mean, with the phase 1 and 2 workovers and the KJ pipeline, we've added about 1,200 excuse me, MCF per day of gas and almost 100 barrels of oil, and that's just from phase 1 and 2. So we're moving into phase 3 now.
Fantastic. Well, look, gents, that's all the time we have today. Thank you all for joining me, and I'd also like to thank both Simon and Sam for presenting and taking the time to answer some questions. As I mentioned before, a recording of the webinar will be on AXP's website and social media platforms later today. Simon, before I let you go, do you have any final comments to leave with us today?
No, I'd just like to reiterate that you know, we thank the investment audience for their support of the company. We've done a lot in a short time. I can see that people are thirsty for you know, for what's next for the company. So we'll continue to keep people updated as we move forward. I also want to make a special note of thanking the employees and the contractors and supply chain that support AXP every day in the field and across our operational base. We couldn't do anything without those people, and they're doing an incredible job. I've seen it firsthand, as I said earlier, and they are the most important asset at AXP. So yeah, thank you.
Fantastic. That wraps it up for us here. Thank you, everyone, and have a great day.
Thank you.